Joining us now for an exclusive interview on set, Michael Saylor, co-founder and executive chair of Strategy. Really appreciate you coming out to New Jersey, Michael. Thank you.
Happy to be here.
Okay, so the volatility, crypto's fallen over 50%, I think minimum of 10 times. If you are invested in crypto, you have to have a bit of a thick stomach, correct? Like, deal with volatility. The same thing has been true of your stock and your new stock, STRC. You call it Stretch. Are you trying to strip some of that volatility out with that equity?
Yeah, the idea is to create an on-ramp for people that believe that Bitcoin is going to be around for the long term, but they can't handle the volatility in the near term. So the idea of Bitcoin is you get on a roller coaster and you're expecting 30% or more, but you got to hold it for a decade. The idea of Stretch is we're going to strip the first 10 to 11% of that return. We're going to pass that to the credit investor. Our equity investors accept the excess volatility. They over-collateralize it. They get the excess performance. So STRC is a preferred stock that pays a monthly dividend. It's about 11.5% annualized right now. It's way over-collateralized. The bet of the company Strategy is Bitcoin will go up more than 11% a year, and our equity holders are going to make a fortune. And the bet that the credit investor is making is Bitcoin's a real legitimate thing, but I want to get paid 11% and ideally defer the taxes.
11% is a huge number as a dividend, effectively. You know there are people watching and listening right now that are saying, they're using my initials, BS, in vain, bull, pucky, right? How is 11% possible? That is a big number.
Okay, Bitcoin's up about 37% a year for the past 5 years. That's the slowest it's ever grown. Our company Strategy is up about 55%. We've levered that Bitcoin. The bet is Bitcoin is going to outperform the 11% over the next decade. Now, if Bitcoin outperforms the 11%, then our company equity is making a lot of money. If Bitcoin performs if it's up 2% a year, all it needs to be is 2% a year, we can pay those dividends forever, Brian. And if Bitcoin...
If just up 2%.
Because we're sitting on a mountain of equity. We're sitting on more than $50 billion of Bitcoin as collateral. So Bitcoin only needs to go up 2% a year for us to pay the dividends forever. The equity, MSTR, wouldn't make as much money, but the credit's fine. If Bitcoin goes up 0% a year, then in 50 years, we got to figure something out.
So private credit has been two bad words lately. You know that, right? You look at Ares, KKR, Blue Owl, Apollo, some of these funds, private credit, all the cracks, blah, blah, blah. Does your then private digital credit, I think is a fair way to say it, does that run alongside private credit, or is it meant to supplant private credit?
If you're the investor that you want a credit instrument that pays you double-digit yields, normally you had to go after something like private credit, but the price you paid was illiquidity. It's not liquid, and it's...
They have your money, you can't do it. You give it to me back.
Heterogeneous. It's like 1,000 different investments. It's illiquid, and they're going to lever it a bit to try to give you a 8% or 9 or 10% return. What we've done is taken the world's most liquid asset, Bitcoin, which is global capital, very volatile, and then we built a credit instrument where the idea is let's make it extremely liquid, let's make it double-digit return, let's make it homogeneous. The credit, the underlying collateral of STRC is Bitcoin itself. So you can assess the credit risk of STRC every 15 seconds by looking at the price of Bitcoin moving.
And how does it...